Hello guys and welcome to the Centralized Nation, the channel where crypto is made simpler. Glad to have you back guys, or here for the first time. Basically today we have a very different video from the usual, I would say. I think I can say that, but one that I think will be very useful for you guys. That's why I'm making it, even though it's not my favorite kind of video for sure. And I'll explain you later why. But yeah, basically today we're going to some different indicators and statistics to the typical on-chain analysis that we usually use to see where the market is going, the cryptocurrency market, of course, and Bitcoin. But this time I want to show you some different indicators, more macroeconomic indicators that I think are very important for us to consider right now, because as we've seen, especially from the last bull market, crypto is much more correlated with just the markets in general, especially tech stocks like the Nasdaq, but we'll talk about that later. But yeah guys, before going further with this video, please keep in mind that I'm not a financial advisor, so this content is simply for educational, entertainment purposes. So don't take everything as anything I say as financial advice, and do your own research always, please guys. But that being said, if you like this kind of content, if you think it's useful, if it gives you a different perspective or just adds on to your perspective, please leave a like in this video. It's a great way to support the channel and to get this video to more people. And of course, if you enjoy it and you want to see more, please subscribe and turn on the notification bell so you don't miss a single video, guys. But yeah, we're more than glad to have you here in this decentralized nation all together. But yeah, before starting the video, let's do a fun game, please. Tell me in the comments right now, what do you think, or where do you think the crypto market is going in the next year, let's say, and why? And do it now, because it's better before the video. I think it's more interesting. We'll see more different answers, and we can create a very good discussion in the comments, and I'll enjoy that for sure, guys. But yeah, let's start, let's get onto it. We have here the Bitcoin US dollar chart, as we can see here, because Bitcoin is still the main cryptocurrency in the space and the one that drives the rest of the market, I would say. And of course, one thing, as I was saying before, we cannot just use these on-chain metrics, especially on-chain metrics due to Bitcoin, because now we are very correlated with the other markets. There were a lot of institutions and wealthy players coming into the cryptocurrency markets in the last bull market, and that changed our markets a bit, I think, and we saw even a higher correlation of Bitcoin with like the Nasdaq, with tech stocks. And we can see it here. I have a graph for you showing you just publicity, let me just remove that, showing you how it goes. We have here no correlation, or like they were both going up, but not much correlation. But since this point onwards, we can see here some correlation between what the Nasdaq is doing at a larger scale with more liquidity in, and what the Bitcoin is doing, being Bitcoin a higher beta asset. With higher beta we mean like a more volatile asset, so an asset where there's potential for more reward, but also potential for more downside, and that people perceive as riskier. You can see here that especially from this moment onwards, in November 2021, like Bitcoin seemed like a higher, showed the direction of the market before, what happened in the Nasdaq. And here, of course, we had kind of a decoupling of the movements between the Nasdaq and Bitcoin. There was a clear decrease in correlation, also due to the Nasdaq, the FTX situation that had a massive damage in crypto and stopped a bit of a rally that I think might be due for crypto. But that's one of the things we'll go through in this video, guys. So I think this is very, very interesting. But yeah, guys, as you know, when the Fed starts with the rate hikes, they remove liquidity from the market, and naturally, the Bitcoin price decreased. People start selling Bitcoin For many reasons, I think mostly institutions and rich individuals, high net worth individuals, see it as a more riskier asset. So when there are problems and when they expect more downside in the market, as many were predicting, and when we expect liquidity to be removed from the market due to the Fed rate hike increases, they just sell. They remove their capital, and their gains. They cash out their gains and they remove this huge amount of liquidity, dropping the price of Bitcoin. Especially also because Bitcoin is a very asset that is very easy to sell. It's very liquid in the sense that you can just go to an exchange, you get your money you sell your Bitcoin and you get your money immediately. Very simple. You can do it 24/7. And yeah, for example, it's not as easy to sell a house or a piece of art, I would say, guys. And yeah, the rate hikes I think have been very significant, as we can see here in this graph. We had pretty almost 0.25 interest rate after COVID, where the Fed before was raising interest rates really high as well, little by little, and then they just had to decrease everything with the COVID situation. But right now we are even higher than COVID levels, as you can see here. Much higher than COVID levels as a 4% interest rate. So naturally the liquidity is being removed from the market, as we can see here. And naturally, let me see if I can show you. And naturally there is less money to be spent on Bitcoin. So you can see here a lot of liquidity was added to the market since 2020. Sorry guys for the publicity. Since 2020 until recently, when the Fed started with the rate hikes, and also selling some of their balance sheet assets that also contributes to a higher real interest rate. So yeah, I don't think that will stop. I don't think Fed will stop with the rate hikes. So I do think we are likely heading for more downside. And if the Fed does stop, it's probably because they broke something. And when they break something, there are problems. And when there are problems, people don't ape into the market. So we might even see more price depreciation after the Fed just pivots and starts decreasing interest rate. In fact, I'm creating a video about that, guys, to warn you about the probable issues we'll have at that point and why you should not ape into the market. Not financial advice, just sharing to you what I won't do. And yeah, if you'd like to see that video, I think it's very useful, and I'm just doing it because I think it really adds value and can save a lot of people from getting wrecked. So if you want to see that video, you know what you have to do. Subscribe, turn on the notification bell, and make sure you don't miss anything. It will come very soon after this one. But yeah, of course, this is a situation, but it's important to analyze what I think will happen right now, okay, guys? And looking at the Bitcoin chart, I do think we can have a bit of a rally right here, maybe until to 18,000. Also because everyone is very, very short, short. Yeah, there are a lot of short inflows in the market, but everyone is very, very bearish. All the YouTubers, everyone, expect more downturn, and it's really a bad sign. When the market is off on one side, usually has some squeezes. In this case, short squeezes, and I do think we can have a quick rally, especially because we have been in a period of dollar weakness right now. The dollar was going super up with all the interest rates and everything that was going on in the economy. But right now it's pulling back a little bit from this incredible increase, and it's normal this pullback, but I think it can hold for long. But after a while, I think the Fed will keep increasing interest rates, everything will go as it should, and I do think this pullback will be retraced and the dollar might even do new highs. So we need to be very careful about that. But while it does, I do think we can have a little bit of a short rally, just a rally that you can incentivize people to become a little bit more bullish, and then we have more downside, and hopefully we can reach the bottom of the bull market. But let's see. But yeah, guys, this is normal. Don't find it strange, because in previous bull markets, in previous bear markets, we have plenty of rallies, as we can see here. So the market doesn't go down in a straight line. So it's normal to have a small rally to make people more excited, and then we probably will see further downside, guys. So that's what I'm counting on. So please don't turn bullish, guys. That's the exact reason why I'm doing this video. I don't like to talk about price. I don't like to talk about where is the market going, is this crypto going to 1000x. I don't like to do that. I prefer to focus on the technology behind cryptocurrency, why I think it's going to be fundamentally adopted, and why I think we can set our futures up if we choose the best companies. But I don't like to talk about price appreciation, because it's also very tricky. I'm saying this is my opinion. There's no guarantee it's right, and I don't want to mislead you guys. But I did this video, and I think this video is important because I don't want to see people getting wrecked. And I do think in a bear market, as you can see here, it's better to be patient. Guys, it's better to be patient. You'll still, as you can see here from 2018, you still have a lot of time. For example, here we have the bottom, and things stuck around the bottom for long. So, and even if you're not sticking around the bottom, you see here, we had another great price decrease that you could get back. So yeah, it's better to be patient and wait for the right moment than to just step in. And I do think there's some more downside, and I'll tell you why exactly. Because we have here the yield curve inversion, guys, and it's a yield curve inversion that is freaking me out. I'm not joking. Basically, the yield curve inversion has predicted like some of the major crashes in the economy. Okay, guys, we have here the dot-com boom in this range where okay, guys, we have here the dot-com boom. We have here the financial crisis of 2008 year, where it touches the yield curve. We have here our COVID-19 crisis that we recovered with a huge dump in liquidity that we cannot do right now because inflation is getting a bit crazy. And right now we have a huge dump in this inversion of the yield curve. And this basically means that people are not expecting good things in the future. And this indicator is a good indicator because it usually predicts things in advance. It predicts crashes in advance. As you can see here, it's 2007 and the crash was in 2008. Okay, guys, and what really scares me, and predicts things with around a few months, 2 years in advance from what happens. And what really scares me here, for example, it predicted this in, the first thing it started was in November 1999, and then in 2000 we had the dot-com crash. But as you can see here, this yield curve inversion is much deeper than the rest of the yield curve inversions, and that is scary, guys. That means I'm afraid of what might be coming, because it might be a sign there's something bad is really coming. So watch out, guys. I do think we'll probably have another systemic event that will affect the world, whether it is bankruptcy of some bank, just a huge debt crisis that can affect several countries, especially Western countries, or just another pandemic like COVID-19 or anything crazy. We might have something like that coming, guys. And yeah, that's really scary. So please stay safe, and naturally, when that event comes, it's probably after a while after that event, or during that, the panic that the event will cause, is when we reach market bottoms for the cryptocurrency market, guys. For every market, basically, but for the cryptocurrency market. And I do think we are, regardless of the on-chain analysis that might corroborate what's going to happen, I do think we cannot just overcome or just disregard this macroeconomic situation as a market, because we'll face the consequences. Every market will face the consequences, and crypto right now is not seen as an edge against currencies, for example. It's just seen as a price speculation asset, a more volatile asset right now. And we have to analyze it as so. And if you guys have investments there, even if you do believe in the tech, I want you to be careful, just to make sure you don't lose your money, okay, guys? That's the only thing I want to do in this video. But not everything is negative. I think there is great technology being built in this crypto market, in cryptocurrencies and blockchain. And this bear market has one good thing, that is, it will bring prices down. It will also swipe away the bad projects, the projects that are not delivering, that are not built for bear markets, that are not sustainable, and it will keep the good projects. And then you at lower prices, you can invest in these good projects and ride the wave until of the next, let's say, bull market, guys. So right now, don't give up on crypto. There's more downside coming for sure, but it's the best time for you to just focus, learn everything you can about the project, about the technology, check the ones who have real utility, and if you enjoy them, invest in them. Okay, guys? And it might change your life. This is not financial advice. This is just what I'll be doing in this bear market. So if you guys would like to do the same, or if that sounds interesting to you, just join this channel, okay? Just subscribe, turn on the notification bell to don't miss a video, and we'll go on this journey together. This journey of decentralization, let's hope, because that's the kind of cryptos I want to support and the kind of cryptos we need to succeed. But yeah, I hope you enjoyed this video. I hope this is useful. Stay safe out there, and I'll see you in the next one.